At the time of recording, it's moved out yet again to fresh all-time highs, but just how much higher can the Nasdaq go? Hello, I'm David Jones. I've been a technical analyst in financial markets for almost 25 years, and this is our channel dedicated to US stocks. I thought we'd take a step back and look at the bigger picture, really. Take a look at the Nasdaq, because it's had an incredible performance so far this year, and actually, going back to December 2018. So in this video, what we're going to do, we'll have a quick catch up with what's been happening over the last few weeks. I'll come back, talk about the reasons why, then we'll get back into it and look where the opportunities might be. As usual, if you're watching and you haven't subscribed, if you can click on subscribe, support the channel, and we will continue to push out a couple of videos on US stocks every week. Let's catch up with what this market's done over the last few weeks. So here's a quick look at the Nasdaq at the time of recording. All-time highs yet again, and this has been the case really since late October of 2019. We've seen the market push out and then continue to push higher. Talk a bit more about what's driving it, then we'll come back and look at things in a bit more detail, come up with some targets and maybe some opportunities if we do see at least a half-decent sell-off. So as I say, the market has hit all-time highs this year, and actually when we go back and look at it, we'll see this was the pattern for much of the last 3 months or so. So far for 2020, it's up around about 7% year to date, which is a cracking performance when we're only 5 weeks into the year. A big driver behind this have been stocks like Tesla, for example, the electric car manufacturer, that's seen its share price go almost parabolic so far this year, plus stronger than expected earnings from the likes of Amazon have also impressed the market and driven the tech sector to slightly outperform the broader stock market. So when it comes to levels to watch, at the time of recording, the all-time high was 9,443. So that's the first obstacle. And after that, we're almost just picking numbers out of the air. 9,500 seems an obvious next target. And ultimately 10,000, which is, it's a big number. But in terms of how quick this market has been moving, I think it's completely achievable if this trend carries on. It's where it sells off that maybe we have the opportunity from a trading point of view. If we look at some of the levels on the downside, 89.10 I think is the first immediate level from the 27th of January when markets got spooked by the coronavirus, and then after that, looking at the end of last year, around about the 86.70 mark from the 30th of December. Let's jump back and look at these levels in the real world. So if we took out that wobble into the end of 2018, the last quarter of 2018, when we saw stock markets really hard hit, you can see it's been pretty straight up progress for the Nasdaq since 2016. But let's focus on this last bit here. It's really from the lows in December 2018 to the present day. So what can you say? It's been a great market. It's been a great trend. We get sell-offs. Probably the biggest sell-off we've had in the last 12 months came from May to June of last year when the market dropped from 78.40 down to 69.60. So that was a 500-point sell-off. We've seen it rally not far off that just in the last couple of weeks or so. So it's a strong trend that's incredibly strong. At the moment, looking at this trend from this late 2018 lows in December, even if the market was to drop pretty much 1,000 points from where we're trading now back to 8,250, still just looks like a pullback in that trend. It's got incredible momentum. If we were relying on things like the RSI that went overbought in early December, but the market doesn't care. The market's powered up another 700, 800 points from there. So it's definitely overcooked at these levels. But let's just zoom in and take a look at some levels to watch if we do see it start to sell off. I think the first immediate one is where we did see something of a knee-jerk panic in markets in reaction to the coronavirus. So around about 89.10, 27th of January lows, you can see the market had gapped lower into that, but we've pushed higher since then. So that's one obvious zone to watch. You've seen what a pretty good job the moving average has done all the way up in this move. It hasn't spent much time below it. If we go back to September, October of last year, the market does tend to snap back, so that's coming in around about 91.25 at the moment. After that, we've got so many different pockets of support left. Late December lows around about 86.70, that sort of level. Then the bigger lows from early December coming in at 81.65, which is pretty much where that trend line is. So yes, it's definitely overdue a correction. But at the moment, we don't see any change by investors when it comes to just wading in and buying the dips. Nothing to suggest that's changed. So for now, I think when it comes to targets, 10,000, okay, it's a big number, but it's a pretty, I think, obvious target from here. It's 600-700 points away from where the market is trading now. But already this year, it's moved 600 points in a little over five weeks since the end of this year. So it's a market with plenty of momentum. Any weakness still looks like a buying opportunity, and I think it's only if we take out, first of all, these lows from December, because that means breaking that year-long plus trend, and it's only if that gets cracked do we have to worry about this trend finally coming to an end, but all still positive. So still strong at the time of recording. We'll come back and see how it's doing in a month's time, but for this update, we'll leave it there. So from me, David Jones, good luck with your investing and trading.